Trading can be frustrating. It can hurt you if you start it on the wrong note. But if you start it with the right mindset, on the right note, you enjoy trading. Wrong mindset and not knowing how to get started has made a lot of beginners wandering in the wilderness of trading industry. And that's why a lot of people say it is not working or that it's a scam. It is not if you have your mindset in place and if you have the right information or the right knowledge. It is not as bad as you think it is. My aim in this video is to show you few simple things that can help you get started without wasting much of your money, your effort, and your time, and you start seeing results. My name is Juliet, and what I share in this space are money secrets that will help you come out of the circle of being broke and start being profitable or seeing results with your money. Join me as I show you few things that you need to avoid as a beginner, which I call beginner's mistakes, the tools that will help you get started, how to pick strategy. Let's dive in. Now, when it comes to trading, we have basics. And the main thing is how we make money in trading. We call it trade. So we make money by buying low and selling high. It's as simple as that. I like keeping it simple. So your job is to find a pattern that moves with the price action per trade. Our desire to find a pattern that works or moves with the price action in order to make the profit or make the money that we are looking for is what the beginners do not understand very well how it works. Or a lot of people that are struggling don't really understand how it works. So let me quickly drop few things I call beginners' mistakes that you need to avoid if you are starting trading or if you are struggling with your trading career. You will need to check yourself to know if these few things I want to mention, if you are a victim of this, then you have to re-strategize. The first one is what I call beginner's luck. Now, this is where beginners and a lot of people struggling in trading make their first mistakes or make the mistakes. Now, the movement in the trading industry, which is normally, it moves up and it comes down, which is once it's pushed up, there will be a pullback or there will be a retracement. Then it pushed up again. So a beginner opened his or her chart and now look at that movement. Okay, from this point it goes up. Definitely it will come down, which is normal. Then say, okay, if it comes down again, I am going to buy. And the person will just click that buy. The next thing, maybe luck will be on his side. He will make profit in that particular step that he took. And he now thinks that is how trading works. No, that is not how it works. That movement that you are seeing is where the knowledge of market structure comes in, if you really understand market structure. So opening your chart and glance at the chart and look at the up and down movement of the market without really understanding the market structure, how the market reacts, what leads to the pull down, when the market wants to change character and all that, then you just jump into the market. You might be lucky that first time, probably lucky the second time. Subsequently, you won't be lucky and you keep struggling. Now, at this point, what you need is the application of your trading rules, sticking to your analysis and having your proper risk management in place. But first, if you say you are entering into trading, be it stock, be it forex, crypto, synthetic, you need a good knowledge of market structure. You need a good knowledge, an in-depth knowledge of market structure, so that you'll be able to understand what happens around that place. When doing your analysis, follow top-down analysis. It will give you a clearer view. What is happening in the higher time frame is also happening in the lower time frame, but you need to check the time, and that is where patience comes in trading. So you need to understand the movements in the market, not just entering the market because you anticipated something or you feel that this is how it goes. Sometimes it doesn't go that way. Another thing I want to point out is not closing a bad market early. Now, let's say that what the scenario in point one played out, and unfortunately it went to the opposite direction. It didn't go in your favor. Now you still anticipate that, see, this market is coming back, it's coming back. If it will reverse as usual, it will reverse as usual. Nobody is saying that it will not reverse, but how long? Maybe before it will reverse, your account is gone. Maybe before it will reverse or it will pull back, it will take a long time. Let's say it's something that is buying from maybe from 4 hours time frame. So when you see that you've entered a wrong market, when you see that the market is not going in your direction, and this is you are already on loss, what else are you waiting for? Close it. It's better to sustain a minimal loss than to sustain a bigger loss. I keep saying that the market is like a river. You cannot fight the river. If you want to flow with the river, you go towards the direction of the river. So the same thing is obtainable in the market. You might analyze the market. Maybe you just made one mistake, or you are even, from the time frame that you analyze, you are even correct. But getting to the market, and the market is doing a different thing, maybe because of news, maybe because of one thing or the other, the market is not going towards that direction. You don't need to, to say that this analysis is correct. Because of that, I must stick to it. Market, you must do what? It doesn't go that way. So when you have a bad trade, quickly close it. Look at it very well. Don't fidget. If you're the one that made mistake, quickly correct yourself and re-enter. I do it. Re-enter the market. But if at that point you are not certain why the trade turns out that way, please close your system, close your phone or your MT5 and go and rest, at least for that period, so that you calm down. This is what happens when you don't close that bad trade early. One, you are living in a dream world, in your own dream world, thinking that it will reverse to come and return back the money that you are losing and equally give you profit. It may not happen. The market will definitely return, but the question is your account still intact as at the time that the market will reverse? Now, secondly, you are anticipating that it will reverse. And the more you anticipate and wait, the more the gap keep widening, the more the loss is increasing. So it's better you close with a small loss than you close with a big loss, or even blow the accounts. I do say secure your capital first, because it is that capital that will give you the opportunity to still come back to the trade, to the market and trade again. So flow with the direction of the trade. Then the next thing I want to point out is revenging the market. A lot of beginners do it a lot. When you discover that you have sustained loss, instead of you to sit down and relax, look at the problem, find out why you lose that money, and see how you readjust and re-strategize and come back to the market. You decide to revenge the market. Now, when you revenge the market, at that point that you are revenging the market, your emotions or your mental health is not stable. At that period, in fact, you are unease, you are somehow frustrated, you are angry. So you cannot definitely make a right or an informed decision. within that period. So when you try to revenge the market will hit you bad. And this market has a way of, when as if it's monitoring you anyway, because I said that to myself at my early stage. So it has a way of, when you lose money, it will come and try to trick you inside. Because of what, you didn't shut down your system, you didn't close your phone to do something else and try to ease off the stress. So it will have a way of trying to try to drag you inside again. And when you enter, it will even collect more than it has collected before. So do not revenge the trade. Let me share this secret with you. You see, trading, knowledge is key. If you lose a trade now and you go back to back test, try task yourself to discover the reason why you actually lose that market, except for manipulation. Because sometimes manipulations do occur in the market, but I don't allow that to mess with my psychology. I don't allow that to mess with my psychology, because once manipulation starts, means if you start having it in mind, market, it will keep messing your psychology, believe me. So, except in case of manipulation, if you lose a trade and you sit down to go and look at what actually led to that loss, the moment you discover the secret, you will hit that market bad. The moment you discover the reason why you lose that money, the next time you see that opportunity again, you will stack it. You will hit the market bad. So that is just how these things work. If you are starting newly, just be patient with yourself. Let me say this: we human beings, we are naturally wired to resist loss. Nobody wants to accept losing money. That is generally our mentality. But when it comes to trading, the case is not the same. When you try to understand this, it will help you. Losing money in trading is part of the process. Understand it, know this and know this. But what we fight is, let our win be bigger, far more bigger than our lose. You need to rewire your mind when you come to trading industry. As regarding losing, it will help you. The goal for me in trading is to put myself in a position where I make substantially more than I lose. That is why I said, let your win be bigger than your loss. And for your win to be bigger than your losses, your risk management must be in place. Your risk to reward must also be in place. That is why I talk about quality trades. A quality trade, let's say you take a trade, you take 10 trades, and in that 10 trades, each of them is 1:5 risk to reward. That means if you are losing this trade, that is 1%, and if you are gaining the trade, you are gaining 5 times. And at the end of the day, you lose 7 trades and win 3. My dear, you are still profitable. You are still profitable. So you need to have all these things in place. And discipline is your edge in trading. Oh, having said this, let's dive into the tools that you need to get started as a trader. Okay, now this is the trading view. I'll also leave the link in the description if you want to get started with trading view as well. So you just sign up. I created this one for the purpose of this video. So you can see that I started afresh so that you don't miss anything in setting up your trading view. So you sign up with your Google account. It's much more easier. We have two versions. We have the paid versions and the unpaid versions. You don't need to start spending much at this early stage. You really need to be sure of what you are doing. Maybe start producing results before you start spending money. But I tell you that the premium version, which is the paid version, is more better. But for now, let's go with the unpaid version. You understand? Let's go with the unpaid version. You sign up with your Google accounts and just hover through the interface. It's very friendly. You look at the pairs, you just play around the interface, get some information concerning the pair you want to actually analyze. Then My very self, I like keeping my chart neat and simple. So I will equally take you to the settings. Then I did these things that you are seeing is a screen record I did, and I don't like using voice to do the screen record because of noise. So it's always noisy. So you just take your time. You can pause the video, look at it. The setups, you can see the setups, the candlestick, the wicks, the body of the candle, the gradients, that's the background of the chart, the color. I changed the color so that you see the color, as in you see how to change the color. Some people like their candlestick to be, red and green. So it depends the color that you want. You just do it the way it suits you, the way it makes you happy. You know, there are people that say when I see the chart, I become happy. So you just do it the way it works with you, the way it resonates with you. So all these things I'm doing is just for you to see how you can do it and have exactly what you want. And you look at the tools. The tools that I set up here might not really be the ones that you need. I set it up based on my own personal needs. So you also pick the ones that you want, and the ones that you don't want, you leave them. But you know how to pick all any of these tools. That's the most important thing there. So these tools, I bring them out for ease of work. Not when you need them, you start running up and down to go and start searching for them. So I quickly bring out the ones that I need and place it there so that it will be easy for me to pick when I am doing something. One thing is this, sometimes you might be analyzing something and you actually forget where you can track or you go and pick that particular tool, things like that. Then the time, you equally mark out the time. The anyone that you click the star, as many one that you star, that one will just come up, just like that. So now if you look at this trading view now, you see that we have seconds. So but that those ones you can see them if you are on premium. If you are on premium, that's when you make use of those seconds. But as we continue, you understand them better. Then also you need to, play with the interface. Just hover your mouse around. You equally know the functions of a lot of tools that are there. Then you have the candles. If you want to change your candlestick, if you want to change them to be lines, to be cards, just hover around the trading view and do things the way you are okay. Understand the fact that you are not dragging or contesting with anybody. I do tell people that it comes when you want to trade, it comes to a point where you need to be yourself. Tell yourself the truth, because your mentor will only share the knowledge that he or she has, but it's still left for you to backtest that or whatever information the person shares with you. So trading is one man thing. Let me use that word. So another thing is that I like to use cross line with dots. So once I hover my mouse, you will just see it gives me a clearer view of my screen. So that's the reason I like using it. So this video is already long. So let's just take your time, go through it. And if there's any question, don't hesitate to drop it in the comment section. I will sit back to answer all your questions, one after the other.
Next is your trading journal. If you are careless, you can't trade. Trading is not for a careless person. You need to be organized. A profitable trader, I always say, is a disciplined trader. You need to have your journal in place as a trader. You can use a traditional method, which is using your diary, or a notebook. You get yourself a notebook. Or you can use a spreadsheet, as I displayed on the screen like this. This is just a simple spreadsheet that I created for the sake of this video. If you need a more complex one, you can get one tracker for yourself. Then if you want to download this, the link will be in the description. You can download it and model it the way it will resonate with you. I like doing things that make me happy, and that has helped me a lot. So you tweak it the way it will help it resonates with you. And if you want to use it like this, there is no copyright. It's a free gift. You can also use it this way. Then there are a few things I will always ask you, because I do the same thing, to include in your journal. When you are journaling, include, if you look at the columns there, you will see mental state. Your mental health is very important in trading. I also leave extra columns in case you want to add anything. And if that column is not enough, just hover your mouse on the headings. You will see add one column, either to the left or to the right. You add another column to suit you. So your mental health is very important in whatever you are doing. Journal it per trade that you want to take or analyze. Know your state of mind, your feelings, your emotions. Myself, if I am uneasy, if I am sad, if I am angry, if I am not happy, if I am tensed, I don't trade no matter what I see in the chart. Because of what? At that point, I am not in my right frame of mind to make an informed decision. That is why once I found myself in such situations, I just note it down and I don't trade. I get out of that trade. Because I am not emotionally settled, I can't be able to make an informed decision. And I'm equally asking you to check yourself very well. If you find yourself in a state that is not that okay, please leave that trade. There is always opportunities every now and then in the market. Learn this and it will help you. Again, in that your journaling, ensure to write down all your activities and performance during the trading day. Is very important. Now, one thing I say to people is this: be truthful to yourself. If you are not truthful to yourself, you can never be truthful to another. Be truthful to yourself in your own activities. That is what will help you to know when you are right and when you are wrong, when to take corrections and when to seek help. Be truthful to yourself. Also, it will help you to adjust, and most especially in your backtesting. Because when you want to do backtesting, you also want to look at what you jot down. So you see how this thing is working hand in hand with each other. Again, journal the market condition. The time you want to trade. How is the market? Is it consolidating? Is it choppy? Is it trending? Note down all these things. You know that choppy market eats money a lot. So know all these things. Note them down per trade that you want to take. What did you do well and what did you not do well in your trading activities? Please note these things down. You need to, reflect on all of this in order to adjust. Trading will shape you, I tell you, but you cannot be shaped or disciplined if you don't take note of these little indices. Set your goals. Set your goals, your trading goals, your expectations. Have them handy, but don't let that goal that you set pressure you. Don't, because you have not achieved the goal that you set, and you put pressure on yourself. And when you want to set that goal, set a realistic goal, set a smart goal. You can check one of my videos. There's a video I made on how to set smart goals. Set a smart goal. It will help you. Stop having that mentality that trading is what I come today and I become a millionaire or I blow. If you come to trading with that intentions, you will not just blow, you will bust. So take things easy, one step at a time. And then finally, in your journaling, be self-reflective in journaling your trading activities, your thoughts, your feelings, and actions. That is what will help you gain more insight, identify patterns, and improve your trading decisions and performance. I wish you blues as you start this your trading journey. Let's hop over to the strategies.
Let's look at picking a strategy. Now, when you want to pick a strategy, there are a lot of strategies out there, but don't be lost. Don't get confused. Pick one strategy per time, analyze it, backtest it, give it time and give yourself time to know how it behaves and how it works. Now, when you want to pick strategy, you will need to ask yourself these few questions. Number one, ask yourself, what market do I want to trade? Is it stock? Is it forex? Is it futures? Is it synthetic? Forex trades between Sunday to Friday. Night, it opens in the night anyway, but Sunday to Friday. So is it that one that you want to trade? Is it crypto? Crypto is 247, synthetic is also 247. It will help you. The next thing you need to ask yourself is, how much time do I want to dedicate in this trading? For instance, in a day trading, you literally sit down for several hours trying to find a trade, and this typically happens in a smaller or lower time frame. So if it is swing trade that is being done maybe from anywhere around 30 minutes to 4 hours, do you have that time and that patience to wait? So you need to find out from yourself the time that you have for trading, how much time you are ready to dedicate or to invest in trading. So you need to ask yourself that question and answer yourself. And the third thing that you need to ask yourself is, what makes the most sense for you? Do you want to follow the current trend? These things are the things that you will find out, or you sit down to ask yourself and resolve it within yourself. But I say it is better to pick what resonates with you. One strategy per time, and focus in mastering it. If you are able to pick one strategy per time, you sit down, digest the strategy, master that strategy. In trading, success comes from identifying a repeatable pattern and creating a strict rule set to manage risk, entries and exits. Now, the key is to refine your strategy through backtesting and disciplined execution rather than relying on emotions and guesswork.